Hello, thank you for joining. I'm Jannarone, Editor-in-Chief of IPO Edge here at the ICR Conference in Orlando, Florida. I am here with the founder and CEO of Waldencast, Michel Brousset. Michel, thanks for joining us.
Thank you for having me. Pleasure being here.
So this company, which by the way trades under the ticker WALD, went public last year. It was a merger of two companies. We're going to get to that in a second, but I want to hear more about Michel's background. This is very interesting to me because Michel worked at French beauty heavyweight giant L'Oreal. Most recently, he was also at some other large companies before that. Michel, tell us about the decision to do something more entrepreneurial. This is still a good-sized company, but of course, it's not L'Oreal.
Yeah, no, of course. I mean, everything in these kinds of things is a deeply personal choice. First is, there's obviously the business opportunity of creating from scratch a company that we hope becomes over time a best-in-class beauty wellness company, but also the personal challenge and desire to create a company that's reflective of my own values and what we want to accomplish in business. So it was, in a sense, a natural segue from where I was at that point in my life and created something.
Great, that sounds good. Now, I have to ask, Waldencast, what's behind that name? Walden's in there, Henry David Thoreau?
Yes, indeed, it's Henry David Thoreau book. To be honest, originally it was just a code name of the company, and I was writing. I was a bit tired of writing Project X as part of the business plan. I was rereading Walden, which is one of my favorite books, and it was on a flight from LA to New York. I had the book right next to the laptop where I was typing, and I just called it Waldencast. So a bit of that history. It's obviously the book has meaning in terms of choosing the road less traveled.
Great. Now, this was a slightly unusual transaction because there was a merger involved as you went public simultaneously. Tell us about Milk Makeup and Obagi and what kind of synergies they have and why this was a match that you wanted to make.
Yeah, I mean, Milk and Obagi were the perfect starting point for this platform. What we want to do, as I said, is create a global best-in-class multi-brand platform that creates and incubates the next generation of purpose-driven growth brands. And Milk and starting in themselves, Milk and Obagi themselves were great starters. Milk, on one hand, is a cult Gen Z brand, number 2 clean beauty brands, Fora, vegan, clean, cruelty-free, all the values of the young generation, what they want to see in brands with meaning and with purpose, a high growth, lots of growth opportunities. In the case of Obagi, is the leader perceived as the number 1 brand in the physician dispensable cosmetic market, and it's not something I say. It's something dermatologists say that they perceive as the best brand in terms of innovation, products, marketing, overall, etc. So those two brands were leaders in their own right, and then as when you put them together, it gave us the perfect complementarity, both from financial, which is the profile of Obagi, very profitably, very highly cash generative, and Milk being a rocket of growth that when we bought it had an EBITDA of -7 of -$8 million, and our guidance for this year is about a 17% down. So high growth, high profitability story.
That's great. Before we dig into some more details, I have to ask you, a lot of companies that went public in the last couple of years are not trading very well at all. You got one of the best performing recent new listings out there from what I've seen. Can you just shed some light on what you guys are doing right? What do you think is going on here?
Well, I think it's the quality of the brands in the company, the financial performance. I think what we built is a platform that is a platform that in this financial simplicity today, not in the future, but today has the profitability profile of best-in-class beauty, the same profitability profile today with significant higher growth. So we're executing this game plan very well. Our strategies are working. We've built, as I said, significant growth and profitability on both brands, and I think that's what is underpinning our business.
Great. So we talked about last year, of course, the big event for you was going public about 6 months ago. Tell us what's cooking in 2023. What are you excited about? What are you working on?
Yes, well, I mean, I'm terribly excited about our innovation plan on both brands. I think we have tremendous growth opportunity on both. Very significant growth ahead of us in international markets. Our innovation plan in Milk is stronger than ever. And our product coverage in the case of Obagi is equally strong. Now, we're a platform that creates and acquires brands. So we're always looking at potential deals in the future that could be of great brands, growth brands, profitable brands with a strong consumer following that could be part of our platform.
Great. Now, there's inflation happening, arguably a recession in many countries. Is the beauty category as resilient as people hoped it would be?
Well, beauty is the most beautiful business. That is for sure. And it's not just in terms of its financial profile. It's high margin and high. It's a beautiful business from a margin and consumer expansion and expandable consumption, etc. But also, if you look at a historical period, and I'm talking about 30, 40 years, beauty remains growing and strong despite recessions, despite different economic environments. It's a business that is driven by premiumization and continues to be driven by premiumization. So yes, there is of course, we monitor and see what is the macros in the environment in terms of recession and inflation, but our ability to grow the business is less related to the market conditions and just our ability to execute our game. We're so small in this big beauty market. It's about gaining distribution, launching great products, building a great connection with consumers. So, I'm very optimistic about 2023 and beyond.
Great. Let's just go back, if we can close with this last question, back to the M&A story. So you talked about the kinds of businesses you might look for, but how soon might that happen? And by the way, Michel, maybe this is a good time to be on the hunt because valuations are lower than they were a year ago.
Yeah, well, we as a company, we're 5 months old. So, we are relatively early in a stage. In M&A, I believe that is better to be right than to rush. There are plenty of opportunities. The great thing of beauty is that there is frankly more targets than there is buyers. So great brands that will be part of our platform. So we've always said that the relevant pace of acquisition in the business will be about maybe 1 a year or so. These are brands that are relatively easy to integrate. We're not dealing with manufacturing facilities, distribution centers, and those kinds of things. We're dealing with essentially marketing and commercial organizations. So relatively easy to integrate, but we have to be the right brand and the right time and the right conditions. So no rushing doing them, but certainly there's a lot of interesting targets out there.
All right, we're going to leave it there. Michel Brousset, founder and CEO of Waldencast. Thanks so much for joining us.
Thank you so much.